First up, we have Australian Vintage, ASX code AVG. Australian Vintage is a world-class consumer-led alcoholic beverage company with over 2/3 of revenue derived from export markets. Presenting for the company today is Craig Garvin, who has been recently reappointed as CEO. Craig, thank you for your time. Over to you. I have been informed that Craig was having some internet difficulty. Oh, have we got you, Craig?
Yes, hello. The whole area that I'm in Balmain has had a power outage this morning. So for anyone watching, please excuse if we've got any interruptions. But who would have predicted a complete power outage in the area?
All good. Thanks, Craig. Hopefully we have you on for the whole time, but take it away.
Okay, thank you very much for having me. It's a pleasure to be here and to talk about AVG, otherwise Australian Vintage Limited. Great company, and it's great to be back driving the company. I'm so pleased to be here. I'm really pleased to be working with the new board that we have. The new board is tremendous, and the team that I lead is also what I think is the best in the wine industry. So jointly with that combination, we're really all about creating shareholder value for the long term. And as we move on to the next slides. And one more, please. Okay, so if you look at where we are and what we're doing, I'll give you a quick overview. It would be nice to talk a little bit about the industry dynamics and how we think we can restore value into the current share price and what are our priorities moving forward. Next slide, please. As a recap, we are a world-class consumer-oriented. Our sales are very much export focused when you look at our innovation program. The world is there for us to take great Australian produce to market, and that's what we're very focused on. We are a segment that only 5 years ago, COVID, the health, balance, lifestyle has never been stronger, and there's a great place for wine to be in that place. We're looking at trusted long-term relationships with growers, suppliers, and customers, and we have leading credentials in the world of ESG and B Corp, which we think is very, very important. Great facilities to grow for the future, and a highly experienced management team, which we'll move on to now. This management team is one of the best in the world of wine, with over 100 years wine and drinks industry management experience. And I'm very, very pleased to be back and see that this team is in place and raring to go with high energy and some great ideas for the future as we move on. The industry itself is in an interesting state. So, trade tariffs came out of China, which we all know about. There was supply chain dislocation with war in the Middle East. Cost hyperinflation in all industries has been double digit, not least of which wine. Throw in extreme weather conditions and an industry supply surplus and changing consumer trends. The industry was not for the faint-hearted for a few years there post-COVID. And when you have a look at the industry and what it's going through now, you can see that there is also consolidation going on in the background, the recent Pernod Accolade deal that you would have read about and seen. So most businesses in Australia tend to be of two major leaders, whether it be retail, airlines, or whatever it happens to be. Wine is going through a consolidation period, but I think there's a lot of optimism about the future if that's done well. But we're not resting on that. We are about creating a much stronger platform for sustainable growth and shareholder value creation. We are seriously looking at the export market diversification. So we have strong markets in Australia, strong markets in the UK, but where we think there's much higher business opportunity, but also higher margin for our base products. Product innovation, we actually think we're the leaders in this space, whether it be zero alcohol, whether it be gin, whether it be spirits, whatever it happens to be, we are actually very, very focused and very, very agile with what the consumer needs. We have a lot of product innovation in wine, which is going live in the UK as we speak. So very, very optimistic about that for the next couple of years. Our pillar brand growth remains the center of what we do. Without pillar brand growth, we don't get the margin and we don't get the flow through to shareholder value creation. So absolutely focused and front of mind. Cost efficiencies, All good businesses have to be the best cost they can be. And I'm talking about value, not about taking cost out that would hurt the business long term. I'm talking about value creation, making sure we use best cost, making sure we still invest in our brands is all there as part of the overall plan. Our asset base is a fantastic asset base, a little under leveraged, and we're looking to make sure we leverage that the best it can be. And of course, we want to reduce debt in a world where cash is king. So our focus on cash flow, cash consolidation has never been stronger. But it's a strong platform for sustainable growth. If we move to the next page. During this period, we've actually been growing sales and we've actually improved share over the last year. That's not an easy feat in this very competitive market. But if you look at where we really want to zero in and restore value, our share price and our value creation, we want to grow sales clearly, but we want to grow them with quality. We want to grow brands and we want to grow margin. It's very, very important. That's why those new markets are really important to the future of our business. We want to enable the company to achieve consistent, sustainable, positive free cash flow. Over a 3-year period, we think that's very achievable, and our short-term goal is to very much get it to a cash zero position. And the third part is grow the share price, clearly. And at the end of the day, that's what's really important to everyone. Create shareholder value and the share price will take care of itself. To the next page, please. So if you look at that in terms of what does that mean and what are the key focus areas, there's probably 4 key ones here I'd call out. Continue to invest in brands and innovation and growth. I want everybody who is watching this or listening to us is to understand that we're a brand-driven consumer company who needs to get its cost base behind it to the best it can be to support that growth. By driving brands, we drive through to consumers and consumers choose our products off the shelf. It's very, very important. We also want to leverage the export opportunity for global new market. China, rest of Asia, and Americas have been very much underdone in the past. So they're real key focus opportunities for us. Next week, for example, I'll be traveling to some of these new markets personally to make sure that we're invested with our right partners. We've got great processing facilities, as I talked about before, and we want to make sure we leverage those. We've got some of the best processing capability in the world. We have the 3rd largest processing facility in Australia alone. So we need to make sure that we're filling those to capacity with high quality volume. That's why we want to stay focused on our brands. Brands give us the best margin moving forward. So we're quite optimistic about that. And we want to be proactive to industry consolidation. As I referred to the Accolade Pernod deal that's just happened as an example of that, we think there's plenty of other opportunities for us in the market to look at as we move forward, but more to come on that later as we move to the next page. So for us to summarize, what does that really mean? As I've said, let's invest in our reputation for doing that, but we'd like to generate those. Hopefully I'm back online again. Sorry if we've got technical difficulties, but as I said, we've had a major power outage here. So we're investing in our pillar brands, step changing our consumer-led innovation. What people drank 10 years ago or 20 years ago, they may not be drinking today or tomorrow. So we're very, very aware of those consumer needs and those consumer trends. You can see the product there, Lem Secco, great example of a limoncello in a new format that anyone under 30 is going to love to buy and have on a summer's day. Just an example of the kind of ranges that we want to bring to the market. And as I said, accelerate the international expansion. If you combine that in a consolidation environment and growth environment, there lies the heart of our strategy moving forward, which I think is really exciting over the next few years. As we go to the next page. Okay. So in summary, we've got a great management team, but we've also got a fantastic new fresh board who has world-class experience, are very supportive of this business. And I'm very excited to be back leading this team, which I think is the best in the industry. You've heard me talk about revenue and gross margin. Well, that can't happen if we don't get new geographies and keep accelerating our brands. We've got great assets, as I've said. Of course, we're going to focus on making our cost the best cost base it can be across the board, whether it happens to be our grape supply agreements, whether it's our cardboard, whether it's our raw materials, whatever it happens to be, we're going to ensure that we get the best cost base we can to support that growth, because any dollars we save go back into the brands and accelerating growth and new geographies. Free cash flow is key, and we're looking to have a ROCE of around 8%. way. We will continue to explore industry consolidation. It's a must-do. And those of you that know me know that this was a passion of mine all along and part of our core strategy. So we're very, very keen, and the board understands this well. The new board is very much in support and very, very keen for us to make a real difference in the industry. So that concludes the formal part of my presentation. Hopefully that came through despite the power issues. Abby, I might hand back to you.
No worries. Thank you so much. Well done with the power issues, Craig.
Yeah, apologies.
We got majority of the presentation there. We have just turned your camera off. I think that makes the connection better, but we do have a few questions if you have the time.
Yes, of course. And it's probably better that the camera's off. You know, I present better without the image, I suspect.
No, we wanted to see your face.
Okay. Right.
So can you discuss the industry consolidation and whether AVG can still participate or not in the near term?
Yeah, and as you heard, it was a key theme of what I just talked about in that quick summary of our strategy. We will look at all opportunities as they come along. Obviously, we're very mindful of debt levels and making sure that we don't put any pressure on that. There's a number of ways we think we could do that. But rest assured, if there's value to be had, we will be looking at it very, very closely.
And is a merger with TWE Wine Division a possibility?
I wouldn't rule anything in or out. I think we'd look at that based on the value that it presents. It would be unwise of me to say, no, it's not a possibility, but it'd have to create real value for AVG shareholders. If it does, then we'll explore those options, and our board is committed to review all options.
And what's your take on the long-standing oversupply of Australian wines, and how will the situation play out? I don't know if we've just lost Craig.
Hello, Abby.
Hello, I think you're back. I'm not sure if you heard my question, but what's your take on the long-standing oversupply of Australian wines, and how do you think the situation will play out?
These things go in cycles, and I think it will balance itself out over time. With the China tariffs coming in and everything else, it was unfortunate timing. It certainly hurt the industry, but I think it will level out over the next couple of years.
And then what are the main countries you export to, and which countries are you going to focus on exporting to in the future?
We'll protect our base in Australia and the UK, but the main focus will be China, broader Asia, and Canada for the future. Over the next 3 years, over the three main markets we'll be putting a lot of attention on.
Okay, and then touching on exporting to China, are there any restrictions there, and how will export levels go back to where they were?
Export levels will go back to where they were based on the economy. I don't see any restrictions from trading from a government or a rules perspective. This is about getting the consumer excited again about Australian wine. There is a little bit of a downturn in spending in China, so it's much more of an economic issue than it is a government issue. So I see clear sailing ahead, provided the economy can talk about reinvesting in Australian brands.
And then, so given a lot of countries want to export to China, what do you see as your competitive advantage?
Our competitive advantage is our partnerships in China. We've got some great relationships with local Chinese traders, such as COFCO, for example. Great distribution. If you don't have distribution in China, then you don't have a market in China. But our advantage on top of that will be the way we market to the Chinese consumer. I'm very positive. We've got some great ideas on that front, working with our local partners already. Already I was in touch with them yesterday, and we're raring to go. So we see over the next few years quite a bit of upside in our Chinese market.
And Craig, could you provide more detail on how innovation is helping drive your margins, and what sorts of innovations are you making?
Each innovation has to bring us a better return than the rest of our business does today. So if our innovation can't generate a better gross margin than what we do today, then we won't consider it. That's the first point. And that means the consumer has to have a need for it and are prepared to pay a fair price. So we're not about doing innovation just for volume. We're about doing innovation that drives higher margin and sustainable returns to our shareholders. And I mean that. Every innovation we do has a much better return on investment than the average of our business. So that's the first point. The second point is our innovation is consumer based. So every bit of innovation we do, we research consumer needs. We look at the future buying behaviors of consumers, and we don't try to imitate what might have worked 10 years ago. We look to the future. That combined with supporting our existing brands. So this is not about doing one versus the other. This is about doing both in parallel.
And then could you comment on global trends for no and low alcohol wines? And would it be easy for you to adapt if consumer preferences change?
Yeah, I mean, first of all, we're the market leaders, so that's helpful in terms of our know-how. We think it's a trend that's only going to grow. I also see a huge shift towards mid-strength alcohol, where people can stay a little bit longer, drink a little bit more, because social occasions and good times has never been more important in the world. We think we're well placed on this. We can dial it up, we can dial it down. I don't feel they're losing any quality.
Lovely. I think if I've still got you, Craig, I've got one more question. We're just bearing on by a thread with the internet here.
Yes, I can hear you now.
Great. I noticed that Australian Vintage also distributes spirits and ready-to-drink cocktails like the limoncello one. Apart from branded wines, could you talk about the other parts of the business and how each part contributes to overall revenue?
It's emerging. So limoncello, for example, obviously that product is Lemsecco is in a very, very early embryonic stage. These products will contribute a lot more in the future. Obviously, I can't reveal those percentages right now, but let me say it's very important we're on consumer trend for the future. So if you took Zero, 5 years ago, it didn't produce anything towards our business. Now it's around the 10% mark in terms of our earnings. 5 years ago, it was zero. 3 years ago, it was zero. So that's a great example where a product can become a key earnings part of your business, even though you took a risk. It's more about making sure that we take a risk based on consumer trends, and we have 3, 4, or 5 types of innovation, and 1 or 2 will become a great earnings part of our business. Equally, same with new geographies. So if China's less than 2% of our earnings, I'd like to think in 3 years, it's a much bigger number than that. You start to put those combinations together, and you've got a very, very attractive business, which is much more able to insulate itself against things like inflationary costs and other things that happen around the world. So that's what we're about, is insulating this business with innovation, new geographies, and brands in our core business.
Great. Thank you so much for your presentation, Craig. I hope you have a very great weekend and good luck with the power outage. I hope it'll come back to you soon. I don't know if I've just lost you again. Anyway, thank you, Craig.